Are we in the perfect storm for silver? And why are gold and silver prices flashing urgent warning signals? And then also, is silver's new recognition as a critical mineral a massive opportunity for stackers like us? Hello, everyone. My name is Rick Fronek. I'm the CEO and founder of Work Smarter for You and Silver and Gold Solutions here in Galena, Illinois. And in today's presentation, I got a lot of information that I want to share with everybody. And I do want to preface this. What I'm going to share you, there's like three key factors I'm going to share with everybody today that all tie into what is happening in the precious metals industry right now, specifically gold and silver, and then also how it can impact you and your decisions and for yourself and your family and your future and what you can do to actually start taking advantage of this and actually start saving in precious metals starting today if you so choose. Now, this is an informational presentation. I do have the disclaimer that I'm not a financial advisor, but I have been following the gold and silver markets closely for several years now, and what I'm sharing with everybody here today is it's gonna filter out a lot of the noise and garbage that's online right now, and it's a lot of the stuff that you see online is just a attention grabbing headline just to get you to watch the video. No, what I'm trying to do here is educate people and share valuable information of what the mainstream media is not telling people and what everybody should know, because all this ties in, and a lot of what I'm going to share with you, everybody here today, is going to answer a lot of questions that people might be having about the gold and silver markets. So today I'm going to be covering the best time to buy, which actually are safe, is actually right now, believe it or not, even with the prices going up. This is still, there's so much going on behind the scenes, which is what I'm going to share with everybody here today that'll make you have a better decision for yourself here. And what are the driving forces behind the market? And I'm going to share a couple articles and one video clip. And in this, it's going to cover, gold and silver prices are sending an urgent warning sign. There's something that is going on that the mainstream media is absolutely not talking about that everybody should be aware of. And then all their official gold reserves surpass U.S. Treasury holdings for the first time in 30 years. Now that is huge, and this is something that's really kind of tying into what's happening with the markets and stuff that people should be aware of. And then also I'm going to talk to you about sound money and how, a simple way to start saving in silver and gold as well, and just a different option for you to choose from. But what I do want to preface this too is over the last 12, this is our 10th session now. We've given away over $1,000 worth of prizes. And in order to be eligible for the prize, you do have to be on the live stream call. And in next Saturday's call on September 13th, it's going to be a huge call because we're going to have a huge giveaway with a membership giveaway, and then also some additional silver and gold that we're going to give away. So you do need to be on the call. And as far as being eligible for the membership giveaway, to be on the call is going to be very important, but then also you can still qualify for that by subscribing and sharing this presentation and liking it as well. So I just want to kind of preface that. And in order to sign up for the live stream and everything, I'll have that link below the video. It just takes you a minute to click on it, and then you'll get a link for the live Zoom call next Saturday. And that way you can just click in on that time. I'm not going to inundate you with email after email. Okay. So let's go ahead and jump into everything. So I want to share this. Like every week I've been doing this here. Back from when we first started on June 21st, first gold was at 33.69 and silver was at 36.02. Now you see here, I eliminated a couple of dates in here, but you see what's happened over the course of the last, several weeks here. And especially from last week to this week, these are huge jumps. Now you might not think 39.80 to 41.06 is a huge jump for silver, but that is huge. Silver actually eclipsing that $40 mark is something that hasn't happened since 2011. And so it's a kind of a rare occurrence. But with it holding strong over that $40 mark and hitting over $41, that is actually huge. And then also gold with I mean, you're talking, just shy of, $140 an ounce in 1 week. That is massive gains for gold. Okay, so what I like to do also is do the gold silver ratio, because I talked about this every week, and it's something that I follow closely on a regular basis. So with gold at 35.88 and silver at 41.06, it would take 87.4 ounces of silver to equal 1 ounce of gold. Now, even though with the price of silver going up over the course of this past week, with the gains in gold, last week the silver the ratio is 86.67 ounces. So even though silver has gone up, The increase in gold has actually kind of offset that, where it's typically going to be in that 40 to 60 to 1 range. So normally over the course of history, it would take 40 to 60 ounces of silver to equal 1 ounce of gold. And right now, with it being at 87, that that's a huge, just looking into the future, it will come back down to that 40 to 60 to 1 range. So when you kind of take that in mind as you're looking at the price of silver now and gold now, this is why it's important to, take this opportunity to, even if you're able to do a little bit at a time, to try and save something in the form of precious metals, because it's going to definitely pay off here in the future. And what I'm going to share the information that's then coming up here shortly, it's going to actually help you understand why that's important because of everything that's going on. So I did want to cover that real quick. So like I said, right now is the best time to, and you're not too late. A lot of people, I talked to a gentleman the other night who, I talked to him back about, a year and a half back when gold was at like $1,900 an ounce. And I had a conversation with him the other night, and it's like, I said, "Do you remember that conversation?" He said, "Yeah." Because it's actually taken, he saw the opportunity and, made the took the initiative to invest in some precious metals at that time. So I want to share this. This is actually a summary from a moneymetals.com podcast. Now, I'll have this link below the video here too, if you want to check out the actual full article. But this is very important because it kind of goes over what's happening here in causing the markets to react the way they do. Um, while silver and gold have rallied strongly here on Friday after the release of weak employment numbers from August, the market now believes it's a certainty that the Fed will resume rate cuts this month, with the only question being whether they cut a quarter or a half a point. Now, anytime there's any rumors about the Fed's cutting rates or whatever, or staying stagnant where they're at, that definitely drives the market. It makes sense that gold is so strong. Tariff turmoil, a weak dollar, debt problems, central bank issues, and bad economic data tend to be positive for gold. But the bigger story lately has been silver. The poor man's gold zoomed through 35 this past summer, touched 40, and then blasted through the 40 resistance zone only weeks later. It's the first time silver has eclipsed $40 since 2011, and it's only spent a few weeks above the nominal price level ever. Looking at the market action here for the week, silver is up 3.7%. And now they're checking at 41.23. This is at the time that they did this podcast, which was Friday morning. Gold is seeing a real nice bump here today and is over $3,600 an ounce now for the first time ever. Currently gold trades at 36.11 and is up more than $160 on the week, or 4.7%. So he's kind of going over everything in this podcast, where the metal markets are at. So this is another one that it's actually kind of huge. Is platinum is up 1.7%, coming at 113.96, and finally palladium is up 3% and checks in at 1140. So what is driving this latest bull run? First, lower interest rates are considered bullish for the metals. Given that they are non-yielding assets, a lower rate environmental means a lower opportunity cost for holding them. There's also been a move into safe havens. Last week, a federal judge held that most of President Trump's tariffs were unconstitutional, and this has created a significant level of uncertainty in the market. So anytime political or Fed rates or whatever, that's going to blow up blow up the markets, cause all this instability. But what I'm going to share with you here, it's showing that there's more to come. Okay. Worries about Fed independence and some soft economic data contribute to the pivot to safe havens as well. This is taking place in an environment that was already cautious. September and October have historically been rough months for stocks. While it may be nothing more than a self-fulfilling prophecy, the number of times it's been mentioned in the mainstream financial media indicates it's on people's minds. So typically in September and October, the stock market, it's been turbulent, okay? And this is something that I had another clip I was going to share, but that goes way too much down the rabbit hole at this point. So I'll share with that a little bit later when it comes to the stock market and how it's reacting to things. More fundamentally, silver is getting a boost from tight silver supplies, particularly a decline in liquidity in the London market. This started last summer when tariff worries drove a significant amount of metal out of London and into the U.S. This occurred in a silver supply environment that was already tight. Demand outstripped the silver supply for the fourth consecutive year in 2024. So there's a high demand for it, and they can't keep up with it as far as mining it. And this is actual physical. We're not talking ETFs or anything like that. We're talking physical silver and obviously gold too. The structural market deficit comes in at 148.9 million ounces, and that drove the 4-year market shortfall to 678 million ounces, the equivalent of 10 months of mining supply. So even if there was no other demand or any, if there was no other demand for silver moving forward, it would take, and everything stopped, it would take 10 months to, mine enough silver to catch up to what the requirements are already out there right now. When demand outstrips mining and recycling output, industrial users of the metal are forced to wade into the market to access existing stocks of silver, and this pushes the price higher. So that's a huge reason why silver has escalated. Okay, and then of course now it's starting to it's starting. There's been more coverage on gold and silver, but they're not telling you everything, what's necessarily driving the markets, and with this, it's something where now people are it's starting to catch on where people are like, wait a minute, silver and gold are doing this. And then once people start doing the physical buying of it, that's going to again increase the price up. So whereas, with central banks and everything purchasing and stockpiling gold, it's what I've talked about in weeks past. That's been a driving force in it. But now when it comes into actual individuals and people getting trying to buy it now, that's going to drive the demand as high as well too. Okay, so I want to share this. This is Danny from Capital Cosm, and this guy named Bill Holter. He's a precious metals broker, and I wanted to share this clip because they make some good points in this clip. Okay, now, like I said, this is live, so it's not something, you're gonna bear with me a second here with the commercial, but we're gonna have to do what they say, okay? What are your words?
Yeah, it's clearly a breakout. I would think silver's going to go at least to 50 and test that. I don't think the paper.
Okay.
On the other side of that, their confidence is absolutely needed.
Okay, so what he was talking about prior to this portion of the clip here is, what's been happening with the demand for gold and silver, and he was talking actually about the debt the United States has, okay, because it's being in the the world revolves around the United States dollar, okay, and whenever a country is in, is basically the reserve currency, they're going to automatically get into debt. And I did cover that last week where it's something where even if, even if we didn't have this government spending and everything, the United States would still be in debt because they're the holder of the reserve currency. Okay. So that's kind of like the penalty, and that kind of comes along with being the holder of the reserve currency. So he's talking about what he sees happening, and also what to do about ETFs and everything.
In order for the U.S. Treasury to borrow the ridiculous sums that we've been borrowing. I mean, we have to borrow $2 trillion a year just to balance the books, just to keep the system afloat. So they suppress price of gold and then whack it. I mean, you remember, go back, 10 years ago, 15, even 20, 25 years ago, gold would start to pop its head up and then whack it, 1, 2, 3%, which back then when gold was $300, $400, a $10 move in gold was huge. And it was demoralizing to see all of a sudden gold was going higher, and boom, they smashed it. Well, the reason they smashed it was because they want to be able to point at the price of gold and say, see, gold bad, dollar good. And that allowed the confidence for the rest of the world to buy treasuries and fund the U.S. deficit. At this point, that's starting to unravel because you're seeing some very big sovereigns liquidating U.S. treasuries and turning around and replacing that with either gold or silver.
And what happens to these paper holders? Let's say the GLD holders, the SLV holders. What happens when there is a failure to deliver, and then the value of their holdings in SLV or GLD is nil? Well, I mean, what's the consequence of that?
This is very important here.
Yeah, I guess my quick short answer would be read the prospectus and find out what you actually own. If you read the prospectuses, they say they don't even have to own 1 ounce of gold or 1 ounce of silver, but they need contracts, or they hold contracts, whether they be futures or whatever. They do not have to own physical gold. They do not have to own physical silver. That's the nuts and bolts of it. Then going one step further, what happens when the great taking happens? And the great taking is going to happen. They put these laws on the books. When that happens, you're completely screwed because your broker, when he goes down, is going to take your securities with them. And my advice on that has always been, well, if you own stocks, you want to hold the stocks, you want to own them, get the certificate. The only problem is you cannot get a certificate for an ETF. So, you're the biggest, fattest lamb for slaughter. Oh, and one other thing, Danny. One other thing. When GLD and SLD first came out, what was it, 2003, 4, 5, something like that? I was jumping up and down. Of course, everybody told me I was nuts, but I was jumping up and down saying that they were pressure relief valves for the physical gold and silver markets. In other words, they made it easier for you to buy gold. They made it easier for you to buy silver. The only thing is that diverted demand away from the real metal and into paper,
Yep.
and poof, it lessened demand for the physical markets by steering those monies into paper.
Hey guys, let's take a quick break.
Okay, so what he's sharing, I mean, that's very important. So there's people that invest in gold and silver, but they're dealing with ETFs. But the only problem is in the event that they talk about this great taking, people are like, no, that's never going to happen. It's actually it's in the writing of all these people that that handle the ETFs and that. So it's like with the great taking, what he's saying is that because you don't physically with ETFs, you don't physically own the silver and gold. And that's what's happening right now. And what I talked about last week is that you have all these people that actually now they're starting to say, instead of, let's converting this to fiat currency, I want to actually take that silver. I want to take that gold and actually physically own it. So what's happening, there's all these, it's like 150 to 1. There's like 150 ETFs to 1 a silver, I believe is what it is roughly. So there's all these ETFs out there to actually 1 ounce of silver, so to speak. And so these people that now are actually taking delivery on the silver and gold, that's actually depleting the actual amount of gold and silver that's actually out there for people to have. So with the great taking, what he's saying is that they put this in place basically because you don't physically own silver or gold in an ETF, you're screwed. The money that you have into it, you basically lost because it's no longer there because they're gonna take that actual physical gold and silver and give it to the bigger powers, the bigger players and the powers that be in countries that are actually are going to have a more of an impact by having that metal. Okay, so I'm gonna go ahead and skip to this part here. This is also critical, but this is going to be about 2 minutes here is what I'm going to share here. Okay. Website. Sorry about this. Like I said, it's live, so bear with me.
Was redirected that demand outside of the physical market. And you look at who's been buying the gold lately, it's been the central bank. But if you're an institution, if you're a hedge fund manager, chances are you're not going to buy that physical gold. You're going to go out and buy GLD or SLD or something. And so when they're
you'd be surprised. You'd be surprised, Danny. A lot of hedge funds and family offices, they're knowledgeable. Not all of them, but a lot of them have been buying the physical metal.
I see.
Now, that said, I can say that for the last 9 months, even close to a year, the demand for physical metal out of North America has collapsed. But yet the price of gold, I mean, if you asked me 5 years ago or 10 years ago, is there any way gold could be could run from 2,700 to 3,500 and North America be a net seller. I would have said no way because, it would stir up the greed factor. But what you're seeing is you're seeing liquidations out of North America and whatever. I mean, uh, I've gotten more sell orders in the last 9 months than I had cumulatively in the last 15 years. And I asked people, why are you selling? And I've only had maybe a couple, three people tell me, well, I'm going to take a profit. And I asked them, well, where are you going to put the money in a system that's going to mathematically collapse to keep it protected? And they're like, oh, well, when gold drops or silver drops, I'll go back in and I'll rebuy it. Well, good luck with that because when there's a failure to deliver, there won't be anything to be had. And if you're not on the bus, you're off the bus and you can't get back on the bus. But the vast majority of people that I've asked have all said, I need the money. I need it to live on. So it tells me that the money on the streets in North America is evaporating or evaporated.
Okay, so that's something I wanted to share that because there are people that are now that are actually selling their silver and gold, and that's the thing is like he made the point of what are you going to put it into? Well, they're expecting the silver and gold markets to drop. They're not going to. I mean, yeah, they're going to fluctuate and bounce around a little bit, but they're not going to drop to anything. My personal gut feeling with gold is I don't think it. I mean, and anything's possible, but my personal gut feeling is that gold will never go below 3,100 again. And same with silver. I do not see it. It'll bounce around. It'll be a little bit of turmoil, but it's gonna, with everything that's gonna happen, it's more than likely gonna go up. And as far as it going down, will it go down below $35 an ounce again? I don't ever see that ever happening again. So these people that are trying to sell it now, and there's, they need it for their expenses and to live and everything. So that's understandable. So it's not saying that what they're doing is wrong, but he's just saying, good luck because the reason why people are doing it is because the inflation and the economy is so bad that there's it's a work in progress. Okay. It's like there's something, when Trump was elected, it's like not like instantaneously his ideas and beliefs and everything are going to impact the economy instantaneously. It does take time. Okay. So it's something that just to kind of, just share that with everybody. It's like if you're not, he says, then they're not on the bus, then they're out of luck. But that's what's going to, when they actually, these companies and these bigger entities and banks actually call for the actual physical delivery, that's going to, as that increases, I should say, that's going to put even a higher demand on silver and gold, and it's going to deplete the inventory of it, and it's going to raise the price even more. Okay, so whoops. Okay, so I want to share this real quick. Okay, so this was silver. Okay, and then I have one other article that I'm going to share, then we'll wrap it up. Okay, so, like I said, if this is courtesy of silverprice.org, if you go to silverprice.org, I'll have this link below as well. It'll actually show you the gold price and the silver price, whether the changes, per day. It goes 30 days, 6 months, 1 year, 5 year, 20 years. What do you see here? Everything that you see is plus. Okay, and that's like one of the, like I said before, gold's outperformed the S&P 500 since the turn of the century. So people, yeah, there's been this stagnant area. Like you look here for like silver. Okay, so you go 2005 when it was down here, and then here's a spike in 2011 when it hit its all-time highs of 48.58, and then now this week we did actually surpass the $41 mark. But you see all these stagnant years here, and that's where people are like, well, it's not really doing much. So that's why people have not been saving in the form of silver or gold. And it's the same with if you look at the gold charts. But in this case here, like I pointed out before from what Mike Maloney has shared also, that you have this gigantic cup and handle here forming. And if you go back to the 1970s, it's a really huge cup and handle where this is actually just the handle, and this is part of the cup. So if you want to see more about that, so, you can check out I think my last video, I did share that as well too. So anyways, this is something to kind of keep in mind. So the people that had bought silver in this area here, they're starting to dump it now when it's up around here. Okay. So yeah, they're making a profit, but, as far as it going back down, it's most likely not going to the point of this level here. Absolutely not. There's no way. I don't think silver, like I said, I don't think silver will drop below 35, but I mean, there's a slight chance it could, maybe bounce around down to 30 at some point. But from what I'm going to share here, I don't really see it happening. Okay, so this is also from Kitco News. Okay, official gold reserves surpass U.S. Treasury holdings for the first time in 30 years, but central banks are just warming up. Now, this is very important, which ties into everything I've been sharing so far. Now, this is an article by Niels Christensen, and I'll have this below as well. The gold market has been on an unrelenting rally for the last 2 years, with central bank demand playing a critical role in driving momentum and generating solid value for the precious metals. And even after 3 years of record demand, one market analyst says that there is still plenty of room for official reserves to continue growing. Central banks are still in the early stages of accumulating gold and rebuilding their official reserves. There is no reason why gold can't represent 80% of official reserves. What does this mean for gold prices? As central banks continue to buy gold, I would expect we will see prices at multiples of where they are now. It's kind of key there. The bullish outlook comes as Costa highlights. This is part of the article. This is like, I clipped out a couple pieces of it, but this is the majority of the article. The outlook comes as Costa highlights an important milestone for the precious metals for the first time since 1996. Gold holdings have surpassed those of U.S. Treasuries and central bank reserves. Now that is really huge. Okay, this is something that, and actually, let's see. Okay, I thought, oops, sorry, my apologies. I thought I had the image of it here. Oops, oops, hang on a minute. I'm a little bit, okay. Okay, and this is just one piece of a broader trend. In a report published in June, the European Central Bank noted that gold surpassed the euro in official global reserves. Costa said this is not surprising that central banks continue diversifying into gold as global sovereign debt has been growing at an unsubstantial pace. Specifically, he pointed to the U.S. government's current account and fiscal deficits, which he said puts the U.S. dollar role as a world reserve currency at risk. Now, it's something that I had mentioned a little bit earlier about, hey, when you're the reserve currency, you're going to have debt, and you're going to, there's going to be some kind of debt anyways, just to maintain that presence. But in this case here, a lot of countries are looking at that more. And this goes back to what I've said in previous videos, that with the sanctions that the U.S. put on Russia back in when the war started, that actually is what raised the red flag over the last 3 years. This is the first time in history that the U.S. is facing this dilemma, he said. In this environment, the U.S. dollar is the most overvalued relative to other fiat currencies. Noted that allowing inflation to rise is one of the only ways to deal with government debt at record highs, which means the U.S. dollar's value has further to fall. Looking at reserve data, U.S. holds the largest stockpile, with gold representing 78% of its official reserves. Germany's central bank holds 3,350 tons of gold, representing 77.5% of its foreign reserves. And Portugal's holdings account for 84%. Costs add that if the dollar and U.S. Treasuries continue to lose value, all central banks will be forced to buy gold to protect their currency's purchasing power. As for investors, Costa said that even at current prices of $3,500 an ounce, gold remains an attractive asset to own for the long term. In the near term, he expects an impending rate cut from the Fed Reserve to ignite further momentum through year end. However, he emphasized that investors should keep their focus on the long game. Now, this is what I've always tried to tell people. It's not silver and gold and precious metals is not a short-term thing. Although, if you've been following since I started this presentation on Saturdays, you'd have some nice short-term gains here. And 10 years from now, we're going to look back and say, wow, we were so stupid to think that prices now are close to a peak. The imbalances we have in the macro side of the global economy are just so severe and profound that gold prices are so far away from where they should be. Okay, so keep that in mind. Okay, in 10 years from now, that some people are thinking that it's peaking. It's not. Okay, so I'll show this. This is from 10-year gold history price going back from 2015, when you're down just around, I believe it was like 1,200. And if you would have gone here now, we eclipsed the $3,600 mark here this week. Now it dropped down a little bit. But if you go back from 2015, even in a 10-year even if you held gold for, the last 15 years, your profits are exponential. Okay. So this is something to kind of keep in mind. So that's why they're saying it's a long-term gain. Okay. So kind of keep this in mind where, and like I said before, if you can do just a little bit at a time, um, that's what's gonna pay dividends for you and your family, okay, in your long-term future. Now, obviously, if you can't do it, that's one thing. But whether it's silver or gold, you cannot go wrong with either one right now. Your gains are going to be higher with silver, percentage-wise, but either one of them, you're not going to go wrong. Although I kind of am crow a little bit here because the gain from last week to this week for gold is pretty huge. So what I want to do here is, like I said, I've got several people here on the call. We got Carl and Cindy, Randy, Jeff. I was writing these down. Bob, Deanna, Tom, and Tyler. Okay, so today we're gonna have the drawing is gonna be for the 1 gram gold, whoops, which is shown on your screen there. Okay, so this is roughly, well, do the math, around $130 roughly. So this is for today's giveaway. And next week I will have uh it's a spinner thing, a wheel counter thing. It's gonna have everybody's name in it for the drawings there, but uh, today's winner is going to be Deanna. Congratulations, Deanna. So go ahead and send me an email at rick@silverandgoldsolutions.org and send me your contact phone number and I'll just so I can probably text you, just confirm that I have your mailing address correct, and then I'll get this out in the mail on Monday. So congratulations, Deanna. So in order to register for this, just do sngsolutions.org 2025 event. You'll get a confirmation email with a link to next Saturday's call. Just be on the call and you'll have a chance to win as well. And then, of course, anybody who subscribes to the channel and likes and shares it, you'll actually get like 2 entries to it. Okay, so just kind of keep that in mind. Okay, so I'm going to wrap this up and then real quick. I do on my channel, I do have a wealth strategies presentation. I believe that video is actually 20 minutes long, but the actual wealth strategy clip in it itself is around 9 minutes. I encourage everybody to take a look at that video, and it's going to share with you how you yourself can start today saving in gold and silver. And one thing I want to, this is the company that I'm independent associate of, is 7K Metals. Like right now, they're located in over 63 countries across the globe. So no matter where you're watching this video from, there's a good chance that your country's here. But if you, I'll have the link for 7K Metals below if you want to check them out. I encourage you just to see what they're all about and compare them to other companies, because there's a lot of companies that you can buy physical gold and silver from, but what they have is very unique in their sound money wallet, where you can buy gold and silver and it's in as little as increments of $1 at a time. Okay, so there is a membership fee with 7K. I do have to preface that as well. There's two different ones, but basically what you're really doing with the membership fee, you have access to the Sound Money Wall, which is something that no other company in the entire world has. They are the only company that has that, where you can buy incrementally. But then also what's beneficial of that is as you're saving in silver and gold in incremental amounts, if you ever needed to convert it back to currency or your fiat currency and back into your bank account, you can do that with a click of a mouse. Nobody else gives you that option where it's that instantaneous. But what they also did announce this past Monday is that um, with your Sound Money wallet and the money that you have in there, they're going to be sending out monthly statements of it. I'll do a short video on that coming up here so people know what it looks like. But then also moving forward, starting next month, they're going to have where they're going to videotape the actual audit process of the gold and silver that's being stored in the vaults, which is really cool. No other company would do that. But this is going to show you that the precious metals that you do have saved with them is safe and secure. Okay, so I encourage people to check out 7K. Like I said, they're in over 63 countries. It's kind of in a colorized map. So all those countries that are colored are the ones that are part of the 7K family now. And then, like I said, this is it's an example of what it looks like in your back office, where you can do 1 ounce US silver eagles, 1 ounce gold eagles. You can go towards a 100-ounce silver bar or 1 ounce gold bar. This is an example here. And so like once you reach that 1 ounce or full ounce, you can have it physically shipped to you. And then there'd be like the shipping fee or whatever, but it would be physically shipped to you and you could actually own it, or you could just, if you're not sure or feel safe about having it in your home, you could always keep it safe in the vaults there as well. Okay, so that's just, I wanted to share that with everybody. And what I'm going to do is I'll do this. Okay, so next Saturday is the 13th through September 15th. As a bonus to anybody who does sign up with 7K or creates their new membership, I'll send them a Silver and Gold Solutions coffee mug, which you see there in the picture, and then also the 1 ounce silver Indian buffalo coin and a 1 ounce copper coin. Now, the copper coin could be something different because copper is a precious metal that's um, is good to have as well. Okay, there is the actual physical demand for it is pretty high too, but because it's not like a high dollar item like silver and gold, it kind of gets swept underneath the carpet. But it is a good precious metal to have. Okay, so that would be my bonus for anybody between now and September 15th. If you do create a membership with 7K and you use the link that I share below. This is what I will send to you for myself personally as a gift for thanking you for taking charge and saving for yourself and your family in your future. And also with just to kind of close it up with this, with this kind of gives you 19. Oh, this is what I want to show you with the big cup and handle. But with 7K, with the membership, there's the basic and there's the legacy. Basic is renewable every year. That gives you storage up to $1,000 with the gold is our gold and silver. The legacy gives you up to $50,000 of gold and silver. And actually, I did find out that even if you surpass that 50,000, right now they are not charging anything additional to anybody. So that is something that's an added bonus. And so even with the storage costs of and the being able to save incremental like $1 or two at a time, nobody else does that. And the value of the memberships exceeds what other companies charge you when it comes to just storing precious metals. Okay. And a lot of them have minimums that you have to store. They won't let you store a little bit at a time. So kind of keep that in mind too. But I'll close up with this. Okay. So here's going back to 1973. Imagine if you bought gold back in 1973, where you would be at now. Okay. So I just kind of said like Mike from goldsilver.com, he always refers to this cup and handle where you have this giant cup and here's the handle. And now we're starting to do this. This is another cup and handle forming. Okay. So this is kind of what's happening the same as well in the gold, the silver market as well. So I want to thank everybody for your time. I hope you got some great insight from this. So kind of take everything that I shared, kind of piece it together and just do your due diligence. You know, if you are able to save in a little bit at a time, even maybe you're not able to do like an account with somebody or go through one of the companies online or something like that. But even if you're able to do like a little bit of silver each week or each month or something like that from your local coin shop or something, that's still something better than nothing. Okay, because in the long term, it's going to pay dividends. So hope everybody got some great insight from this video. I look forward to seeing everybody next Saturday. So definitely sign up for the next week's event. It's sngsolutions.org 2025 event. And then also on my worksmarterforyourfuture.com. Every Monday or Tuesday, I do a recap of everything that I share here in a written format. Okay. So if you don't have time to catch the video or the full video, you can always go back and or go to the website worksmarterforyourfuture.com and it'll have all the information that I shared on there. Okay. So I wish everybody a great rest of your weekend. I look forward to seeing everybody next week. And if you have any, like I said, go ahead and subscribe and share and comment on the video if you got some good insight from it. And I look forward to talking to everybody again next week. Take care. Bye.